Welcome back. Well, it's definitely turning out to be a bit of a flattish day for the frontline indices, but it's definitely the banks which are dominating in terms of sentiment on the upside. So we have the Bank Nifty, which is up around 0.6%. And overall, you'd have to say a positive advance decline ratio. So let's see how that moves and trends at this point. But if you'd have to say in terms of the banking space, it is Axis Bank, which is ruling the roost. Remember, that stock has given returns of around 37% on a year-to-date basis, and it's building on that. And something like an IndusInd Bank doing well as well. That stock up around 30% on a year-to-date basis too. But let's concentrate on a couple of other stocks now. North American Class 8 truck orders have fallen 20% sequentially in November. The region constitutes about 30% of Ramkrishna Forgings' total revenue. How is this slowdown in new orders going to affect the company? We have with us Naresh Jalan, who's the Managing Director of Ramkrishna Forgings, joining in to discuss this and more. Mr. Jalan, hi, welcome to the show. If you could just start by detailing to us the fact that Class 8 truck orders in North America have fallen quite significantly for the month of November on a sequential basis. What does that do to your business currently?
No, I think, like I have already stated, couple of times, I think Class 8 trucks are not the only sector which we cater to in the North American market. We are prevalent across Class 5, Class 7, Class 8, all the markets over there, and including LCV. So we are not majorly affected with Class 8 segment in any way.
Okay. So in the broader sense, if you could just give us an idea in terms of what's happening in the North American markets as a whole for the company, as well as the MHCV segment. If you could detail these two segments' performance right now.
I think in overall North America, we are doing extremely well vis-a-vis last year. We should be at least doing our exports close to 20% more in terms of our overall exports to as a company. And in terms of North America, we are doing extremely well right now. And we see right now the projections, whatever we have, we will continue to do extremely well over next 2 years.
All right. Hi, Mr. Jalan. Morning. As you said, you'll do more than just MHCV as well as the North America Class 8 truck sales. So give us some more details then. I believe that the domestic MHCV plus North America, it constitutes nearly around 85 to 90% of your total mix as of now?
No, I think MHCV constitutes close to 60%.
Right.
Overall, in terms of domestic as well as exports together,
right.
It is around 60% of my total order book.
And what about the other part of your business, that's North America?
There's oil and gas, off highways are there.
Okay.
Railroads are there in a big way. LCV market, we are doing extremely well right now in the North American market.
Right. So what about your non-auto part of your business? Currently it's small, but the government's trust on railways has been quite large. So do you see your non-auto business scale up? Point number one, what is it? Where is it headed? Point number two, EVs also is very, very small. But see, in the next few years, what do you see that share headed to?
In terms of railways, we are seeing right now a lot of traction in railways in India. And I think with the government trust in investments into Indian railways, this year itself, we have almost doubled our top line from Indian railways. And we expect five-fold growth in next 2 years from Indian railways. Okay. And for that, we have already done our capex way back, and all our approvals and other things are already in place. So slowly, steadily, we are growing our Indian railways business. And with the thrust right now we have from the government of India, I think this is going to be five-fold in next 2 years.
What is? Give me a couple of numbers, sir, please. Non-auto is how much of your business? Where is that headed? And EV is how much of your business right now, and where is that headed? Two numbers.
Right now, I think non-auto is close to around 9%.
Yes.
And I think we should, by FY25, we should be close to around 20% in non-auto globally. And in terms of EV, right now, we are only at 2%. By FY25, we are looking at almost 5% in terms of our top line in EV.
Okay. Now, just for the near term, Mr. Jalan, the entire energy crisis which is taking place, you have said that it was in fact a positive for you because there are orders which are coming into the company on account of the energy crisis and the issues taking place in Europe. Can you quantify that for us? Is that trend still continuing?
Yes, I cannot exactly put a quantity to it, but the order flows are extremely strong from the European OEMs, and we expect Europe to do extremely well over next 2 to 3 years. And the movement has just started, I think, with India gaining most of the share of business in the engineering from the European.
So how much is Europe as a percentage of sales currently? How much are you getting in terms of incremental order inflows? How much do you expect it to probably rise? Just give us a sense in terms of numbers, what the opportunity might be factoring in such a windfall.
I think approximately close to around 9% to 10% is my right now European sales, which will double by next year. And probably with the current order book or order flow, whatever we are having, this will be equivalent to North American sales in next 2 years.
Okay.
And we are looking at increasing our overall exports by almost 30-35% year on year for next 2 years.
All right, Mr. Jalan, final few questions before we let you go. I think you have a target of around 5,000 crores of revenues by 2025, right?
Yes.
To get to this number, how much of capex do you need to put on? Or how much do you need to incur? And your debt was around 1,300 crores. Say by 2025, what is your debt number likely to look like?
No, I think overall my debt number is going to go down from here.
Okay.
And we are not doing any more debts by borrowing. I think most of our debts, whatever we are doing, is through internal accruals.
Okay.
And all capex, I think at the range of 250 to 300 crores will continue for next 2 to 3 years, which will take us to 5,000 crores. So, and this is mainly going to happen through internal accruals.
And debt has peaked out at 1,300 crores. So by 2025, yes. Do you have a number? Debt comes down to what, 500 crores or any number?
I think we don't have a number, but basically what we are working is to basically get to debt to EBITDA level below 1.
Okay, all right. It's been good speaking to you, Mr. Jalan. Thanks so much for stopping by and giving us all those details. That's heartening to hear because you're doing less than 2,500 crores in the past year, and you're saying you can go to 5,000 crores with a capex of just around 200-250 crores on a per annum basis. So sounding optimistic, hopefully demand keeps pace with your plans. For the time being, we'll slip into a short break. You come back, we continue our focus on markets and stock specific action.